Futures rising again. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Sonali Bassett. Katie Greifeld is off today, and Bloomberg open interest starts right now.
Coming up, we are back in the green as investors await fresh catalysts for the rally that erased the S&P 500's 2025 losses. Bold calls out today. Citi and JPMorgan are betting that this year's biggest losers, that's small caps, tech hardware, and home builders, will become short-term winners as trade tensions ease. And deal-making in the Middle East. President Trump seeks to forge deeper business ties that push U.S. tech initiatives to center stage. Sonali, what stocks are you watching?
And some people like those initiatives, particularly these AI companies. NVIDIA is up almost 3% pre-market, about 2.8%. Chip makers are all higher as the U.S. clears a path for Saudi Arabia and the UAE to pursue more AI ambitions. NVIDIA and AMD are already planning to spend billions of dollars in the region, Matt.
All right, also, I'm watching American Eagle Outfitters. They are down sharply after withdrawing their forecast. Another company to withdraw its forecast due to the macroeconomic certainty. You can see the shares today down 13% in the pre-market. They've already lost about 50% of their value, Sonali, in the past year.
And Matt, meanwhile, President Trump has sent a message to the world in Saudi Arabia. Make business deals and the U.S. won't meddle in your affairs. He praised the Middle East during a meeting with Gulf state leaders yesterday in Riyadh.
I've seen such progress. It's really incredible. I've also seen great unity and friendships. I've spent a little time with you just before this, and I've seen tremendous unity, tremendous friendship, and the whole world is watching the Middle East, and many are watching with envy. You have something very special going on.
Now, President Trump landed in Doha today. Annmarie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance, is there. She joins us now on the road. Listen, Annmarie, yesterday, 1 day ago, was full of fireworks. Do we expect those same fireworks as he continues this trip through the Middle East in terms of multi-billion-dollar announcements or strategic deals?
Well, you know, Sonali, sometimes 24 hours in Trump world certainly does feel like a year. A ton of deals were announced yesterday, and also some massive headlines on the geopolitical front, especially when it comes to the likes of Syria and the president lifting sanctions on Syria and meeting the new Syrian leader this morning before he touched down in Doha, where I am. And he's spending his morning at the royal court. We are expecting him and the emir to come out. They're going to be signing a bilateral cooperation focus on economics. More deals are expected. Last week, Bloomberg News, we had exclusive story that Boeing was lining up to work with the Qataris. The Qataris are willing to invest, buy 100 wide-body jets. I was told this morning that actually you can expect that number when they come out and announce it to be higher. So more than 100 jets being purchased by the Qataris. So expect more deals today when it comes to the president and his time here on the ground. Also, we are wondering whether or not, for some it's fuss, for some it's consternation, whether or not the president is going to announce this Air Force One Boeing from the Qatari royal family that he would be using. What I've been told that this is still being worked out, whether or not this is legal. There's a bit of pushback right now in Washington amongst Republicans about the security of this, the legality of this, and just whether or not it's appropriate.
It's interesting to say the least. I mean, we did get the Statue of Liberty as a gift from a foreign government, but is this plane used? I mean, I'm not 100% sure it makes sense to have someone's old plane that they've dressed up in their own style as Air Force One. How does that work?
Well, I think what would happen is you would just have the bones of the plane, and they would completely remove all the guts. There would have to be a tremendous amount of security overhaul if this was going to be carrying the president of the United States. The issue, of course, is the fact that the president in his first term put in for a new Air Force One with Boeing, and obviously there's just been delays on delays. And now the president talked about it to Fox News last night, was that the Qataris heard about it and offered up this jet that they had, which I believe at the moment is actually being housed in the United States.
All right, Annmarie, thanks very much for that reporting. Bloomberg's Annmarie Hordern reporting from Doha. Apparently it's a 13-year-old jet, and like if they can't retrofit a new one for Air Force One, how long would it take to rebuild the old one? It's a definitely an interesting story. Let's get to the implications of his trip for the markets and really for AI, because new agreements will give Saudi Arabia wider access to AI chips. NVIDIA is rallying on the news, and Supermicro is soaring after signing a $20 billion pact with Saudi-based data center company DataVolt. For more, we're joined by Mandeep Singh, Global Head of Technology Research at Bloomberg Intelligence. Mandeep, great to have you here on the program. So NVIDIA makes sense. Supermicro, I mean, didn't they have trouble finding an auditor?
Well, I mean, that's, I guess, past right now, given how much things have changed.
That was months ago, right?
Well, and look, I think more than Supermicro, this means a lot for NVIDIA, just because, you know, there was concrete announcement around sovereign buyers emerging for NVIDIA's chips. And so far, the biggest concern was NVIDIA is exposed to the hyperscalers. They kind of control 45% of NVIDIA's revenue. In this case, now you've got sovereign buyers who are talking about multi-year purchases. And actually, they announced an 18,000 GPU purchase, which amounts to close to $1 billion in revenue. So we were all concerned about how NVIDIA and AMD are losing China revenue. Well, now we have an offset here in the form of two countries, Saudi and UAE. And it trickles down to a Supermicro, but it's not very clear, you know, what sort of margin impact it will have on Supermicro. So more, I would say, of a positive for NVIDIA than it is for Supermicro.
Yeah, and my one comment on this, too, is in addition to the benefit for AI, there could be very significant implications for energy costs. And I think that's probably not really understood yet what that could mean. I also want to talk about Apple here, because there's a different story to be talked about when it comes to the challenges that it's facing. We are now hearing that Hon Hai, which is a partner for Apple, is tempering its full-year sales outlook. How do you read through to the impacts?
Well, so in the case of Apple, I think the smartphone refresh cycle we know has been protracted. It really hasn't played out, even though there is a pull forward component that everyone expects because of tariffs, and that should drive the 1Q. But in terms of the, the data center trend that has helped NVIDIA and all the players on the server side, you don't see the same in terms of smartphone as an end market. So with Apple, until and unless you have more clarity on how much Apple Intelligence is going to improve over the next few months, it's hard to kind of pinpoint a big refresh cycle scenario right now.
Yeah, and in the meantime, Apple down about 0.4% pre-market. Mandeep, we thank you so very much for your time. That is Mandeep Singh of Bloomberg Intelligence. Now, the U.S. is changing its policy, as we've been seeing, and they have been forcing strategists to change their forecast multiple times this year. Now, some of that includes Ed Yardeni and David Kostin of Goldman Sachs. They have recently raised their year-end targets after cutting them earlier in the year. Joining us now, Bloomberg's equities reporter, Alex Semenova. And it's interesting, you talk to investors and they say, we want to buy, but we're nervous about it too. Is it same for the strategists?
Yeah, pretty much. Basically, you can't fight the momentum of this market once it goes back to the upside. It's been pretty incredible. Last month, actually, strategists cut their year-end forecasts at the fastest pace since the pandemic, and now they're going back to their bullish ways. They entered 2025 pretty optimistic until we got tariff announcements, cut their forecast pretty quickly, and now that we've gotten, a pause on tariffs, they're saying that the risk of a recession is lower. They're expecting that AI will regain momentum after positive earnings. You have Goldman Sachs actually upwardly revising its forecast twice since last Friday. David Kostin there first, moving it up to 5,900 by the end of the year, and then 6,100 after the trade deal with China. And then also Ed Yardeni, I just caught up with him yesterday. He said that he usually sticks with his forecast through the year, and it's been really unusual to have to revise it so often. He said that he told his clients that he reserves the right to revise his forecast as often as the president changes his mind.
Yeah, I thought it was a great quote there in the lead of your story. What are we now expecting? When you look across the sea of forecasts that you survey, what's the outlook for this minute in terms of stock market performance?
Yeah, so on average, most people are still expecting a modest gain. The really interesting thing, though, is a lot of strategists are highlighting the fact that the fundamentals here haven't really changed over at Barclays. Alex Altman there, he's the head of equities tactical strategist, said that he doesn't feel quite comfortable with stocks making all-time highs when some of the same issues that we've been facing are still here, when the 30-year U.S. Treasury is within a whisker of 5%, when the universal tariff rate right now is 14%, but you really can't fight the momentum, especially at Goldman Sachs. They say that U.S. equity positioning is still low, and that's kind of the case for more upside.
Yeah, we're not all too far from those all-time highs. You saw it in that chart over here.
Something like 3%.
Well, you're focused on the 2-year.
Yeah.
The 2-year yield,
Listen.
which is just over 4, right?
And the 10-year has been around 4.5%. And listen, if the bond market is telling you there's trouble, my question is, how long could the equity market shake off that concern for?
All right, I guess we'll have to have Alex back on and ask her that question again. Alex Semenova, thanks so much for joining us from the Bloomberg Cross Assets Desk. A check now on futures right now. We're looking at gains on the S&P 500, or at least we were 10 minutes ago. Let's bring up the chart and see here. Up 0.2%, almost 0.2 and more on the NASDAQ 100. And then the small caps, even though you had a call out from, what was it, Citi and JPMorgan saying, buy what's done poorly previously, the small caps, the Russell 2000 at least, down. Coming up, President Trump wants the price of oil to come down between $40 and $50 a barrel. That's according to Goldman Sachs. More on that next. This is Open Interest. Let's get to high interest now. Look at what's making headlines around the world. President Trump said the U.S. would explore normalizing relations with Syria after the toppling of its longtime autocrat Bashar al-Assad. Trump is also pledging to lift sanctions against the country's new government. He met with Syria's new president, Ahmed al-Shara, during his Mideast trip. The decision to lift sanctions and normalize relations may spark fresh tensions, though, with Israel, which has issued warnings about the new Syrian government. And United Health Group is giving Stephen Hemsley a one-time $60 million equity award on top of his $1 million base salary as he begins his second round as CEO of the beleaguered insurer. Hemsley will also get additional personal security benefits following the December murder of United Health's top insurance executive. Yesterday, the company unexpectedly replaced CEO Andrew Whitty, who resigned reportedly for personal reasons. And House Republicans may land on a compromise on the state and local tax deduction today. The deal would represent a breakthrough in one of the thorniest policy debates in President Trump's economic package. The House Ways and Means Committee is debating a proposal that calls for increasing the SALT cap that Trump put in place. Remember, it was unlimited for over 100 years, of $10,000 to $30,000, and phasing out that deduction for individuals who earn $200,000 or more. But several lawmakers have already rejected that plan, saying it doesn't do enough to reduce the tax burden for people living in their districts. Sonali?
We're going to turn now to the oil market because crude is down about 1% in today's session. But Goldman Sachs has shared an in-house analysis of President Trump's social media posts. And they've determined that he seems to favor U.S. oil prices between $40 and $50. And for more, we're going to bring in Bloomberg deputy editor for U.S. American oil markets, Devika, Krishna, Kumar. $40 to $50 oil based on social media posts. How different of a fundamental analysis is this than what you're used to?
It's quite remarkable, especially if you think about how Goldman arrived at this conclusion. They analyzed about 900 posts, which is quite incredible when you think about a president tweeting about oil prices or, posting on social. The floor and the ceiling, so to speak, of oil prices has become the entirety of the oil market's focus at this point because prices have been trapped in a range for a long time, and where those levels are going forward is going to be critical to determining how people put on positions and how they can manage risk.
I would ask if this is good for his standing in places like Texas, where he has a lot of support. But clearly, the president wants to bring down the price for consumers. It doesn't help those who are producing oil here in the U.S.
That's right. It's been a tricky thing to navigate for politically. Of course, right from the start, the president has said we want to lower prices for consumers. We want to bring down inflation. And this has been a key reason for them to, advocate for lower prices. But having said that, the energy industry is also a big proponent of his political moves. And so how he's going to please both sides is going to be interesting to watch, because a lot of shale companies during earnings this quarter have already started talking about, well, at these prices, we don't really know how sustainable production volume is going to be. Maybe if prices stay at 50, maybe even go lower, things will start to slow down quite significantly in the oil field, and that's not going to be good news for.
Well, you're not going to drill, baby, drill if you can't make any money on the product, right? And their break even is what, 50, 55?
It varies. Again, it depends on well quality and like with geology and a lot of different things. But yeah, on the whole, it's not going to be wildly profitable for them to keep drilling into a market where, bear in mind, demand is also looking pretty shaky if you think about tariffs and the impact on buying from Asia in particular. So there's a lot of moving parts at the moment, especially when you think about OPEC Plus bringing back barrels. So the global market is starting to look rather oversupplied going into the second half.
And to make your point here for a moment, pulling up the S&P 500 sectors, you're seeing energy not being the worst performer. That would be consumer discretionary, but it's kind of been splat dab in the middle. It is flat on the year. It did not see that Trump bump that you might have expected on the heels of the election. Now, when you think about the supply-demand dynamics of the oil market right now, what is going to be the biggest driver of that pricing that is not a Trump social media post?
It's probably going to be what OPEC Plus does. This was quite a big move from the producer group. Back-to-back months of increases of over 400,000 barrels a day. That's a significant amount of volume that's coming back to the market, and very quickly at that. So whether those volumes continue to come and how quickly they come, especially given what's going on with trade talks between the U.S. and China, I think those are the two big factors that the market is watching. If I had to say one more, it would probably be what happens with Iran, whether they achieve a nuclear deal. You saw yesterday President Trump talking in the Middle East and saying once again that we will not hesitate to put maximum pressure on Iran if we don't achieve a deal. So that's a big variable for the market as well.
All right. Excellent reporting. Devika, thanks so much for joining us. Devika, Krishna, Kumar there covers oil for us on the BN side. A check on futures right now ahead of the opening bell. You can see we're looking at gains on the S&P futures of more than 0.2%. And remember that we closed out the day yesterday in the positive, up about 0.75%, and 3.25% was the gain on Monday. So we're really on a roll here. We wiped out the losses for the year, and we're back up to just under, on the cash trade, 5,900. Coming up, Morgan Stanley's Michelle Weaver is on the program. We'll tell you why she thinks 6,100 may be now in play for the S&P 500. This is Open Interest.
Two of Wall Street's major trading desks are making the same bold call as U.S. stocks tensions ease on the pressure on them. We're going to look into the biggest losers for the quick short-term profits. Citi and JPMorgan, they are bullish over the next few weeks on small caps, technology, hardware, and home builders, all of which have lagged the broader index. But will you buy? Joining us now, Michelle Weaver. She's Morgan Stanley U.S. thematic and equity strategist. You're seeing a proper jump back. You had Matt talking about how the S&P 500 now finally positive on the year. Same goes for the NASDAQ 100, but not so much for the Russell 2000. It's still down almost 6% this year. Do you think that they could see some love? Would you get in, given the continued potential pressures on the U.S. economy?
I think it's still too early for small caps. I think there's a lot of temptation to go into some of the lower quality names, the things that have been beaten up the most. But I still do think it is too early. Tariffs, the risk is going down. We're seeing, positive momentum there. But the tariff policy is far from final, and small caps have a lot fewer levers to pull when it comes to tariff mitigation strategies. So I think it is still too early there.
Don't forget that the Dow Jones Industrial Average, Shanali, is still down year to date.
Are you watching that?
These kids, Michelle, they don't care about the Dow. They're all looking at the Russell 2000.
We run way too fast and loose, us kids.
No, in all seriousness, I wonder where you look for the most upside, right? I mean, even if we get to 6,000, 6,100, that's not achieving a new high on the S&P 500. So are you looking in emerging markets? Are you looking at some private assets? Are you looking somewhere else besides just big cap U.S. stocks?
Yeah, so you mentioned 6,100. I just want to formally set out too. Our range now is 5,500 to 6,100. That's the trading range that we got pre-Liberation Day. Liberation Day was such a surprise, I think, for markets on the level of tariffs that we saw. You got through the range to the bottom side, but I still do think that 55, 6,100 is where we're going to be, especially into the summer when we get more formalized discussions on trade. But I think, you know, not to sound like a broken record, but it's still high quality, it's still large cap. Those names have worked well, and that's really still where we see, and we want to be relatively safe from here.
Where
the
can
risk
I get
is
my
not
25% gain this year? You know,
It's
I think
tough,
that maybe
it's
that's tougher to come by, my friend.
I mean, if we want to talk excitement, I mean, the AI names have been doing really well. I think within the AI story, what we're still really excited about is the AI adopters. We've seen, you know, the people building out the AI infrastructure do well, the chips names, the power names. But what about what happens when we actually take this technology and put it into businesses? And that's a very idiosyncratic story. Unfortunately, you can't just buy, you know, a sector like that. But I think that's where you're going to see a lot of excitement potentially back half of the year and into 2026.
Michelle, you're sticking with us. That is Michelle Weaver of Morgan Stanley. And it's interesting. Everyone's talking about the small caps, Matt. The Magnificent Seven is still down more than 5%.
We've been here before when everyone talks about the small caps. The Mag 7, yeah, I have been looking at NVIDIA because it is also still down for the year, but it's powered higher since Liberation Day.
Meta and Microsoft are the only two Mag 7 names that are up on the year.
That's fascinating. I wouldn't have thought that. And I mean, a lot of stocks came down after the tariffs and went up. NVIDIA just climbed higher and higher and higher. It's in basically like a post-Liberation Day bull market, almost.
Speaking of, as we head into the open, let's take a check on these markets, too, because NVIDIA is powering the market higher. We had another day yesterday where that Trump trip in the Middle East had driven a lot of exuberance after the tariff talks. We are up on another day of gains despite the continued weakness in the bond market. Nobody's listening. People are buying that.
Yeah, he wants to do deals, and that's definitely helping the stock market. S&P futures right now up 0.2%, would be a third day of gains for the S&P. The NASDAQ up 0.25%. This is open interest. Moments away from the start of trading on this Wednesday. This is Bloomberg Open Interest. I'm Matt Miller. You're looking at gains, slight, but still green arrows on the S&P 500. We could push above 5,900 on the cash trade today. We're there in futures. NASDAQ futures up 0.2%. Small caps down about 0.3%. Even though Citi and JPMorgan say buy these, it's a short-term tactical trade, but they've been hit too hard. You hear the opening bell on the New York Stock Exchange, and this one touches close to home. I have no relationship to Horace Mann, which is an insurance company. However, the educator was the first president of my alma mater, Antioch College, and he said, be ashamed to die until you've won some victory for humanity, a quote I will never forget. On the NASDAQ, Hashdex, some kind of crypto ETF, doesn't matter. Shanali, what are you watching in terms of the stock movers, the big heavyweights right at the top?
I don't know that humanity is being saved today, but at least the AI industry is. You have NVIDIA on the rise, about 2.3%. Other chip makers also higher. The U.S. has cleared a path for Saudi Arabia and the UAE to pursue AI ambitions. NVIDIA, AMD, they're already planning to spend billions of dollars in the region. Take a look at AMD. It's up almost 6%. Supermicro, this is an anomaly, of course, up more than 17%. But of course, they had a rougher year last year, Matt.
Yeah, lost an auditor, had trouble finding a new one, kicked out of an index. Now they're back. However, let's talk about CoreWeave. Higher ahead of its latest quarterly results. Investors are going to be looking for any insights into demand for artificial intelligence infrastructure. Clearly it's there, but how much? And what I think is interesting is this is a recent IPO, Shanali, as you know, and they've done very well. They're up like 40, 50, 60% since they IPO'd, and that was just at the end of March. So CoreWeave trading at $66 and change. Still with us is Michelle Weaver of Morgan Stanley. And Michelle, what's your take on the animal spirits? I mean, are we going to see IPOs coming back in the market? We're already seeing a few. Are we going to see M&A deals get done? Is this the right environment? You talk about the back half of the year. Are we going to see deregulation that's really going to make us excited about markets again?
So I think there's a few different components to the animal spirit. So we have kind of the corporate side that feeds more into the M&A story. That will get a lot more excitement if we do see deregulation. I think it's still a little bit early. I think we're probably past peak uncertainty now, and that would be represented by Liberation Day. I do think, though, we can see a little bit more confidence within corporate decision making. But consumers are another important part of the animal spirits sentiment type story, and the consumer is still in a really precarious place. We run a proprietary consumer survey, and 42% of consumers said they're planning to cut back in response to tariffs. That figure was about 35% pre-Liberation Day. So people are very aware of what's going on and are very aware that companies may be raising prices to offset some of this. So I think, corporate confidence, corporate sentiment, that should be in a better picture now, but the consumer is still a place to watch.
And corporate was pretty rough. One of the most fascinating things I've heard in the last few days was in your interview with Ken Griffin. Shanali flew down and spoke to him on Monday. He said this administration already has been a champion of deregulation because they haven't put on any new regulations, right? And so we're, 5 months into the year, and they've just completely stopped that. And for him, it made a big difference. It stuck with me.
Yeah, it stuck with me, too, because it's already a win, right? And you have the Treasury Secretary telling the surveillance team this week, third quarter or fourth quarter is when you really start to see it. So to the extent that you could add that into pricing for the market, what does it look like?
So I think policy sequencing has been something that's really interesting to compare under the second Trump administration versus under the first Trump administration. So under the first administration, you got the dereg first, you got the tax cuts first, and you didn't see tariffs until a couple years into the administration. This time we're seeing basically the exact opposite. We've seen some of the more growth negative, the more challenging parts with the tariff policy up front. But we are still really constructive that you could see more dereg, more tax cuts in the back half of the year. And that's why our price target for year end is still 6,500. So first half of the year, still a little choppy. Back half, we could.
6,500. Nice.
You'll take it.
You'll take it.
Not a 25% jump.
No, but
higher,
good.
nonetheless.
Positive.
But there are still factors that people are worried about. We have Walmart reporting tomorrow. This is going to be a big barometer of the U.S. consumer, albeit you could argue now somewhat wealthier consumers more and more, those people over $100,000 in income.
Stepping down.
Yeah,
trading down, I think is the term.
Trading down. So what do you make of what they might say tomorrow? How much can that change the game?
Yes. So about the top 40% by income spend around 80% of the total. So that group is something that's really important to watch for the broader health of consumer companies. I would say, consumer spending is not about to go off a cliff here by any means, but people are becoming more selective with where you're allocating your dollars. More discretionary parts of the market, you could see more weakness in there. In that survey I just referenced, people were planning on cutting back from dining out, from travel, from apparel spending, but for the more core goods, staples type retailers, they should fare a little better.
We have hit 5,900. It's a big round number. It doesn't mean anything, but it still is kind of a milestone. Romaine was talking about this yesterday on the close. How much can this market be driven, or how much further can this market be driven by retail? Because retail investors held strong post-Liberation Day, right? As at the smart money was dumping its bets. Do they have any room left to run, or are they fully invested?
I think retail is still fully invested. I don't think they're going away from here by any means. They show that they were willing to hold fast, and they were not put off by some of the headlines. I don't know how much potential upside you could get driven by retail, but I do think it's still a mechanism of support.
Speaking of support, what were they buying? Because you heard all of these anecdotes about retail diving into Tesla. And on the year, Tesla is still underperforming all of the Mag 7 and much of the market. And you look at what's actually been performing, it's actually industrials, financials, utilities, those things that those big institutional buyers are used to buying for the sake of protection. Did the retail buyers buy the right things?
They were still into tech. They were still into some of those high-flying type names. I don't want to speculate on individually what names they were putting on, but I would say overall, it's the support mechanism they provided for the index broadly that was really, really important for what they did.
You see more of the Mag 7 turn green. That's when I think you can call that a return of animal spirits.
Right,
Yeah.
and
Right?
I mean, it makes sense also that, MAGA loves Mag 7. I'm sure they're big buyers of that. Let's take a look at, well, first of all, let's thank Michelle.
Thank you
Great
for
to see
having
you.
me.
Thank
Real
you.
pleasure having you here. I hope you come back soon. I'm going to take a look at the move screen on the Bloomberg terminal. This is a great way to look at a dynamic picture of what's happening in the S&P 500. You can see the biggest gainers on this side, and obviously NVIDIA is always going to be on top. As long as we organize by points, and if you want, you could click here and organize by percentage change, and then you see smaller companies right there. Thank you, Joe. Super Microcomputer, really dominating advanced micro devices, NVIDIA. It's all about tech today. You can see they're bunched up there. And on the low side here, Northrop Grumman is the biggest loser. Biotech, Cooper, Target. You're going to see some names that you're not familiar with now if we organize by change. Go back to points, Joe, and we'll see the biggest losers, who's subtracting the most from the S&P 500 index. Berkshire Hathaway, Apple, and Exxon. You also see on the move screen a great picture of breadth. You had 300, I think, and 33 stocks down and only about 160 gainers. Here, in terms of the sectors, industrials, as Sonali mentioned, financials, utility, consumer staples leading the way. So kind of a defensive gain today. On the downside, you have those consumer discretionary. Wait, this is year to date. Okay, year to date. I thought it looked very familiar. Consumer discretionary has done bad. In terms of the day, IT, again, all about tech, communication services, the hyperscalers, and healthcare leading the way up. A bounce back, a dead cat bounce, if you will, after United Health. And at the bottom, utilities, materials, real estate, and energy. Sonali?
A little bit of risk on. Now, coming up, chip makers are rallying on the heels of President Trump's Saudi Arabia visit. We're going to power up on the conversation around semiconductors next. This is Bloomberg Open Interest. This is Bloomberg Open Interest, and we're going to take a check on stocks because it's also looking at Green Day on the screen. It's 0.2% higher on the S&P 500, 0.4% higher on the NASDAQ 100. That Russell 2000 still 0.2% lower and not getting the love that Citi and JPMorgan have been looking for. But it's time now for our top calls. We're looking at some of the analyst action in focus this morning. And first up, we're looking at Cboe Global Markets, getting a double downgrade to a sell at Morgan Stanley. Analysts say that the de-escalation of the trade war between China and the U.S. has come sooner and better than expected, but this would limit the upside for options volumes on Cboe. You're seeing about a 1.8% decline on the morning. Next, Wayfair getting cut to a sell at Loop Capital. The downgrade is driven by tariff uncertainty. We've been talking about looking at those retailers, still up about 2% today, though. Next up, KKR getting raised to a buy at Morgan Stanley. The analyst says that it's a way to play the anticipated capital markets recovery. Fun fact, they made about $1 billion in that business last year. They're up about 1.5%. Finally, we're watching Rosenblatt Securities raising its price target on Coinbase to $300 a share. The crypto exchange will join the S&P 500 index next week. It'll be replacing Discover, and I'm going to be talking to the company's CEO, Brian Armstrong, today in an exclusive interview at 12:30 New York time, Matt.
All right, we're looking forward to that interview and that program. Sonali, let's talk right now, though, about chip makers rallying on the heels of President Trump's visit to Saudi Arabia. The president, as you probably know, has been striking deals left and right to give Saudi wider access to advanced AI chips. NVIDIA, AMD, and Supermicro already reached a deal worth $20 billion. And NVIDIA has officially surpassed Apple as the second largest company by market cap. Microsoft is in the #1 slot. Bloomberg Technology co-host Ed Ludlow, who follows all these big companies and the little ones for us from the West Coast, joins now. So, Ed, what do we know about these deals that lump in a little company like Supermicro along with a big behemoth like NVIDIA?
Yeah, I mean, the unlock is the ability for NVIDIA and AMD to sell their latest generation cutting-edge processor, GPU AI accelerator into that market, Saudi Arabia, right? The Commerce Department announced last night they would rescind the diffusion rule, which in simple terms was a technology export restriction. The reporting had been that were it due to go into effect on the 15th, tomorrow, the US would not have enforced it anyway. And now the question is, well, will we get a new rule and what will the parameters of that be? But you're really smart to flag Supermicro, because literally what we're talking about is the building of data centers in the Gulf. If you can send the GPUs, then a name like Supermicro, which simply packages them into server racks, can then proceed with its deals to do that as well. So their deal with DataVault's really interesting. As you know, it's $20 billion. I would point out that that business is a much lower margin business than actually NVIDIA does, just by designing the chip. I think you also showed AMD. I would point out that the buoyancy of AMD is partly informed by a $6 billion additional share buyback they authorized this morning, which is on top of $4 billion they were already doing. So take that into account. But just look at the research on the sell side from BI. This is immediate sales growth that policy has unlocked for those two names in that region.
It's interesting, Ed, I don't know if you know the numbers to this. I realize this is very new news, but something that really struck me on the heels of these deals being cut or these talks advancing is the fact that this is being done in an energy super hub. Is there a chance here to really accelerate AI computing power through the Middle East, given that costs could actually be a lot lower?
Well, in short, yes. Building data centers requires several things: capital, space, time, and the correct political and regulatory environment. And most who follow the market would agree that Saudi and the UAE are places that conform to those specifics. So take the deal, for example, between NVIDIA and Humane. The first phase is 18,000 GPUs. We measure the size of a data center in megawatts, literally in energy demand. That first phase is a 500 megawatt data center. Technically, that's at the hyperscale level, what we call hyperscale. But if you compare those to data centers around the United States, those range from 5,000 to 11,000 megawatts. So it's small by comparison, but Saudi and the UAE have the tools to get it done. And that's why, again, you see from Bank of America or Bloomberg Intelligence this multi-billion-dollar sales opportunity each year for the chip makers, because they'll move fast in moving the product to those nations and start building.
Ed, there's a lot of talk about the Qataris giving President Trump an old used airplane.
I heard you talking to Annmarie about this. Yeah, go ahead.
And the security concerns there. But what about giving the Saudis, who have such a close relationship with China, these chips that are capable of beating the Whopper in global thermonuclear war? I mean, isn't there a security concern with sharing this kind of high-level tech?
There is security concern. And the whole point of the Commerce Department and the Trump administration reviewing the diffusion rule was the concern that if they allowed those nations in the Gulf access to the technology, those nations have a close relationship with China. They could act almost like a sales channel or third-party funnel. So what we do have is corporate deals. NVIDIA has a deal, Cisco has a deal, AMD has a deal, Supermicro has a deal. We do not have bilateral agreements between the United States and Saudi and the UAE. Those are expected, nation to nation, to come in the coming days. And how they address the China question is absolutely top of mind for everyone. But again, go back to the Bloomberg Intelligence deck on what this means for sales growth of NVIDIA and AMD in particular. It helps them offset the revenue to China. So you'd think that those companies would play ball, be more conducive. And then the next question is, if they rescinded the diffusion rule last night and it won't go into effect tomorrow, what does the new rule look like? Does it explicitly codify restrictions on third parties passing the technology to China? You're absolutely right that that is the key question from here on in.
Ed, we thank you so much for your time. That is Bloomberg Technology's Ed Ludlow, and I've got to say, we're going to want to have him back just to talk about the Musk effect and his visit to the Middle East. We'll keep that in mind for a future segment.
We can tune into his program in 1 hour and 12 minutes.
Absolutely. But for now, we're looking at stocks because we are actually now wavering. We are negative on the S&P 500, but pretty much flat on the morning. We are looking at a reversal. Remember, we started the day in the green. Gains are very lightly being held in the NASDAQ 100, but also starting to turn around. Those Russell 1000 or 2000 stocks now at session lows or near session lows, almost 0.5% lower. We're going to keep an eye on it all. Stick with us. This is Bloomberg Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks today. We're looking at a loss now on the S&P 500. We've had a couple of pretty bang-up days, up 3% and change on Monday, up 0.75% yesterday to almost 5,900. But we bounce up against that level and come back down today. The NASDAQ 100 still holding on to gains, about 0.2%. Take a look at some of the movers here. CoreWeave is one we have been talking about and we'll continue to discuss. It's up like 50% since its IPO. So, and that was just in late March. We're going to talk more about IPOs. American Eagle Outfitters pulling its forecast. Another company to say the macroeconomic uncertainty doesn't allow it to look at the future, and it's already lost half of its value year to date. Nvidia is holding the S&P unchanged right now, gaining 2.5% on those deals. Nvidia and Supermicro both really helping to hold us back from bigger losses after those deals out of Saudi Arabia. And you can see Aurora Innovation and Cboe Global Markets both down right now. Shanali, what are you looking at?
Yeah, we're looking at the progress in trade talks because that and economic resilience so far have fueled a market rally, and it pushed stocks back into positive territory for the year. But the optimism may now also be turning into fears of vulnerability. You're seeing it in that wavering market today. Joining us now for more, Bloomberg equities reporter JP Barnert. We've been asking, right? This has been a temporary pause when it comes to what you're seeing, or temporary de-escalation with China. A lot of exuberance around the Middle East, but to the extent that investors are not diving in fully, what's keeping them from it?
Well, I guess like it's still uncertainty and an unclear path of the economy, and I guess like everybody agrees that we are not going back to the world that we had before the tariff story played out. So there will be some tariffs being in place, even if they find like some common ground that they can agree on. They will not be as high as at the height of the drawdown, but there will be some tariffs, and this will have implications for global growth, for corporate earnings, and probably like for a long-term thinking about like supply chains and how you maneuver your goods around the globe, and especially also for like international relationships. So this is all stuff that people don't know about it yet, and we see it like in so many corporate earnings that they are saying like, guidance, can't say much about it because we simply don't know. And that's the same with investors. And if you haven't been like part of the rally from the bottom because you felt like it's worth going in there, then right now you face a very unattractive risk-reward profile, coupled with uncertainty, coupled with headline risk. And that's just something you don't want to really like own here.
Are we going to rally, though, JP, on a big, beautiful bill? I mean, if we get an extension of the 2017 TCJA and then more tax cuts, especially on the corporate side, is that a catalyst for this market?
That sounds like Trump big and beautiful. That's what he likes. And I would say like it's certainly a possibility. The more good news you get, the more likely the market is to rally. And the thing is like people are still chasing this rally. So there's not enough exposure in portfolios right now to have like that alpha on that you need in a total blue sky scenario. So if we get that indeed, then I'm pretty sure markets can rally further. But for the time being, I guess it's going to be a little bit more choppy and a bit more wait and see, and a bit more depending on what the next headline is going to be.
Yes, I'm glad you brought up the big, beautiful bill, because the bond market is saying something else. You're seeing the 10-year actually up almost 2 basis points. We are closer and closer to that 4.5% level. JP, at what point does the stock market look to the bond market for a clue? Because if you can't rely on the sweetener of too many more rate cuts, if you can't rely on the 10-year staying stable, then isn't that telling you something about the direction of travel?
Well, I mean, I guess the stock market is looking already, but that's the funny thing about the stock market, which it does quite often and not always in a sane way, that it actually looks at the stuff, or the people look at the stuff and they point it out and they raise an eyebrow or two, but then still prices still go up. And let's not forget, like right now, this is a very technical, very systematical driven rally. It's not exactly those people who look at the fundamentals and at the macro data that are in charge right now and that are leading the gains. So everything that is going basically around the stock market in terms of macro data, in terms of warnings from other assets, I mean, the dollar is another topic that you still need to keep an eye on, is, I wouldn't say it's not being ignored, but it's just not like playing a big role in the price action that we are seeing. This comes next, I would say. And of course, if there remains a trend of like anti-American flows, then this is also going to be a problem for the stock market.
All right, getting closer and closer to the danger zone there on the 10-year. JP, thanks so much for joining us. JP Barnert out of Frankfurt. Coming up in the next hour, John Stoltzfus joins us, Oppenheimer Asset Management, as well as Katerina Simonetti of Morgan Stanley. This is Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Sonali Basak. And coming up, we're back in the green. Investors are awaiting fresh catalysts for the rally that erased the S&P 500's 2025 losses.
Chipmakers getting a boost today as President Trump's Middle East visit opens the floodgate of AI deals.
And we might get a major breakthrough. Matt, on Capitol Hill, House Republicans could reach a compromise today on state and local tax deductions.
Definitely a big deal for people who
Like
live
you?
here and people who oppose double taxation. Let's get a check on the markets right now. As Sonali said, we're back in the green, but just barely. I mean, the S&P 500 is unchanged right now at 58.88. It's got to be good luck in some cultures. The NASDAQ up about 0.2%, 21,236, the level there. And the U.S. 10-year getting nearer and nearer to the danger zone of 4.5%. And Sonali, the 20 and 30 years already at 5.
Absolutely incredible. That cost of financing, we got to keep an eye on it. But for now, we're going to go to the Middle East for more on the president's trip. We are now joined by Bloomberg's Annmarie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. We are looking at live pictures right now about with Trump in Doha signing at a signing ceremony with the Emir. What are the details here about how that trip is going?
Well, the president has been spending the afternoon in Doha just off the heels of a huge trip in Riyadh, where he talked about a number of investment deals as well as big shifts when it comes to geopolitics. Right now, it's another investment deal. He's signing this deal when it comes to Boeing. We scooped last week that Qatar was working on buying 100 wide-body jets from Boeing. I actually heard earlier this morning that number was going to be even higher, so we'll have to wait to see what the headline number comes out to be, but potentially north of 100 Boeing jets. This just reiterates what the president has been wanting to do on his trip to the Middle East and how he sees partners in the future. He sees economic partnerships, economic transactions as paramount for his administration, and he really sees the Middle East and the Gulf being the center of that, doubling down on what we saw in the first iteration of Trump when he was the 45th president, but really taking it to another level here as the 47th president. And you could just see that was on full display yesterday in Riyadh.
Annmarie, I hate to keep going back to this jet because it's kind of a silly story in some ways. A lot of people are also concerned about the legality and constitutionality of Qatar giving the president a plane. But to me, it doesn't make sense. If you're worried about how long it takes for Boeing to upfit a new jet, why accept a 13-year-old used jet from Qatar?
Well, the president spoke about this old-time golfer who said, if you're given a free putt, why wouldn't you take it? That's how he views the world. He is being offered a temporary use of a jet that was used by the Qatari royal family that they're not using right now. And he says, this is in his own words, and he talked about this last night in a Fox News interview. He talked about the fact that the United States has provided defense for places like Qatar and Saudi Arabia in the region, and has been a huge help for a number of economies around the world. Why wouldn't they accept a gift? That is the president's thinking. What I have heard so far about this Air Force One jet, and potentially we're going to get this announcement of this temporary basis, is the fact of the matter is the DOD, it would be temporary borrowing from the Pentagon. There's a number of legal issues that are still at play. There's a number of lawmakers that are concerned about what this means in terms of the Constitution, whether it's appropriate or even legally to accept such a gift of this high price value. And then, of course, there is this security concern that even though Qatar is a place where we do have American military troops, men and women stationed here, still a fact it would be a foreign country supplying a jet to carry around the most important person in the United States or in the world, and there is that national security concern. So there's a lot of issues at play here when it comes to this jet. I say there's a fuss for some people, consternation for others. We're going to have to wait to see where this really hashes out, I think, first and foremost on the legal basis.
Right. And we should say also, as we speak right now, you have the U.S. and Qatar signing a letter of acceptance for the aircraft, as well as a statement of intent, defense agreements, as you've been talking about. Now, Annmarie, going back to the golf analogy for a moment here, because you could argue here that the reason you wouldn't take the free putt is for the integrity of the game.
It was
right?
Sam Snead, by the way, is the old-time golfer. Sam Snead.
Okay, but that's the reason you wouldn't take the free putt. And so on this one, what do you think is going to be the bigger question moving forward? Is it going to be, well, let it go because the defense arrangements between the United States and Qatar are deepening, and this is it's symbolic as much as anything else? Or is it going to be a bigger ethical question moving forward from lawmakers as we head into the midterms?
Well, I think we need to wait. I mean, lawmakers already are talking about that he shouldn't be accepting this for a number of reasons. They have issues with Qatar. You know, you have to remember this is a place where this is a government that has had dealings with the likes of Hamas when it comes to financing. Also, Hamas has a political office here in Doha.
And
so there's a lot of
sorry to cut you off here. We want to break into the president right now for our audience.
It's going to work out. I think it's going to work. It's got to work out one way or the other. We know it's going to work out. But you were of great help. And other things, but in particular trade. The trade is Kelly's telling me from Boeing, it's the largest order of jets in the history of Boeing. That's pretty good. And that's 140, was that a 140 or 160? Well, yeah, but you're right, it's actually 200, including the 40, so it's over $200 billion. But 160 in terms of the jets, that's fantastic. So that's a record, Kelly, and congratulations to Boeing. Get those planes out there, get them out there. But I just want to thank you. We've been friends for a long time, long before politics. Well, for you it was politics, for me it wasn't, right? But we've been friends for a long time, and this is an outstanding man. He's a great man, and we're going to help each other. The United States is in a very strong position militarily. We have the best equipment anywhere in the world. You're buying a lot of that equipment, actually, and I think we're going to see some of it in action tomorrow at the, we won't call it an air fair, but it's going to be sort of an air fair. We're going to be shown a display that's going to be incredible. They have the latest and the greatest of our planes and just about everything else. So I think it's going to be a lot of fun and very interesting. But I just want to thank you for the friendship, for the long-time friendship. And again, long before any of this stuff, we just liked each other. That's not a bad thing. That's a good thing. But we always had a very special relationship. And we came from Saudi Arabia, where we have another great man over there that's a friend of yours. And you two guys get along so well and like each other. You sort of remind me a little bit of each other, if you want to know the truth. They're both tall, handsome guys that happen to be very smart. But he's also a very special guy, and it's good to see all the relationships forming in the Middle East, because the Middle East is really being talked about all over the world, and we're having a lot to do with it. We're helping a lot, but they're doing a tremendous job. So I just want to thank everybody very much for being here. I want to thank the media. The media has been very fair, actually, and it's a great honor to be with you. This is, you take a look at this room. This room is the real deal. That's called white marble. It's very hard to buy. Believe me, I know very well, because you try to buy it, you can't buy it. And you just take a look at what you have here. It's been incredible what you've been able to build as a nation. And we're with you all the way, and you know that.
Thank you. The ceremony has now come to an end.
Now, to recap some of the headlines from that presser with the president, he says that the Boeing order is the largest in history. The total order is over $200 billion. And he also says he discussed Iran with Qatar. He discussed Russia and Ukraine with Qatar. We're going to bring back in now Annmarie Hordern to recap a little bit of what's going on under the surface here throughout this trip in the Middle East. What did you make of the more open conversation that the president has been sharing, particularly as it pertains to Qatar?
Well, I think the president is just really outlining how he sees the region. One, it's a place to do deals like this massive Boeing deal that we have been highlighting for over a week at Bloomberg, and $200 billion. That does sound like that is more than 100 wide-body jets. The second, I would say, is that he sees the region as a place to mediate global conflicts. He said he spoke to the emir about Iran. The president earlier today was also speaking about Iran. He went even further to say that Iran cannot just have a nuclear weapon, but also that they need to cut off financing to terrorist organizations in the region like Hamas, Lebanese Hezbollah, and the Houthis. On top of that, he said they discussed Russia and Ukraine. And the Gulf, of course, has been a place that has been trying to mediate this conflict. Russia does not view Europe, does not view even Switzerland as fair negotiators to try to mediate this conflict. So they have been relying on the region, more specifically on Saudi Arabia. And we should note that the president did say on Air Force One on his way over from Riyadh to Doha that he has a full day tomorrow, fully stacked when it comes to going to the United Arab Emirates. But he did say if Putin were to go to Istanbul and he could save lives and go meet him, he would. So the president kept that window open of potentially peeling off on this trip or adding another stop to this trip to bring him to Istanbul. But all of these conversations are happening in the Gulf. And I think that is really pivotal right now for Trump 2.0 if you want to understand where he sees the place for economic relationships and also mediators for big geopolitical conflicts. It's here in the region. It's a big paradigm shift of the post-war order.
Annmarie, we thank you for all of your reporting. That is Annmarie Hordern, our chief political correspondent, reporting from Doha and looking forward to the rest of your trip in the Middle East. Now, Citadel's Ken Griffin had sat down with me for my upcoming Bloomberg Original Series Bullish, an upcoming episode. I had to ask him the best way to navigate the shifting policies out of Washington.
I think in retrospect, perhaps holding cash would have been the best way to navigate this. But that's so contrary to our culture of always trying to be on the offense, always trying to find ways to create value in the markets.
Joining us now is John Stoltzfus, Oppenheimer Asset Management Chief Investment Strategist. The well-known optimist tempered his outlook for the S&P 500 during April's turbulence, but we're bringing him back to ask, is it back, John? I mean, after, I guess, Scott Bessent and Jameson Greer proved to us that the White House is listening with this Swiss meeting and a turnaround on Chinese tariffs. Can we get back to real animal spirits in this market?
Well, I don't know so much animal spirits, Matt, but I'd have to think that where we are is a reconsideration that maybe things aren't as bad as they are, and that there are people who are listening within
Oh, it looks like we have a, do we have a mic problem? You know what?
Do we have a mic problem?
It looks like your mic may have slipped out here.
Oh,
I'll go ahead and, you know what, let's figure out the mic problem.
Yeah, let's figure out the mic problem.
And then we'll get back to John.
We should take a check on these markets while we wait for that, because, of course, we are seeing a reversal on the day. We started higher. We are now lower. We're not showing this now, but actually, if you see the dollar as well, we are wiping out a lot of the gains from earlier this week. So the animal spirits are actually not really around right now, right?
Well, I mean, we're back to 5,900 pretty much. We bounced up against that level, and we're well above now the April 2nd levels, right? And I think there are a lot of investors, a lot of retail investors who were terrified after they watched that press conference in the Rose Garden, but didn't sell stocks, right? We saw a huge downdraft on that following Thursday, on the Friday, then called in the traders Sunday night, and then Monday was a disaster as well. And so now we've gotten back to a level where we've completely recovered and then some. And I wonder, John, you got your mic back on. That's fantastic.
Thank goodness.
I wonder if you don't get some investors who missed out on that opportunity to exit from this market under this administration who are going to do it now.
I don't think so. I think, if anything, I think the idea is now we're beginning to see that there are ears and eyes that are watching the entire economy, that we do still have very much a art of the deal and shock and awe approach, but mixed with Scott Bessent's approach. And with that, we think it's good for the markets. We think overall, we think we're not out of the woods yet on this thing in terms of the tariffs. The 90-day clock is ticking away. But there appears to be some degree of progress that is enough to get the market to relax a bit and recognize the fact that we've seen good earnings for the S&P 500 and revenue growth, that we're seeing a consumer that's stronger. We're seeing essentially it's stronger than expected, okay, even as things slow somewhat, and a Fed that still is on target to doing what it needs to do and independent. So it looks to me like my target might have to be raised in the next few weeks if this keeps up. Going back, I don't know where we'll exactly
Hang on,
go.
what does the Fed need to do? I mean, we saw a really tame inflation print for now, but we've heard some people concerned that inflation could go back up to 3-4% by year end. Do you think the Fed needs to cut here?
I don't think the Fed needs to cut. If anything, I think the Fed needs to stay on target the way it has been now since March of 22, highly sensitive to its dual mandate, which is effectively keeping the economy growing at a pace that doesn't move into a recession, and most recently, since last year, giving real consideration to avoiding unemployment taking a sharp jump. And I think with that, if you can honor the dual mandate here, the recognition should be, we think, because as you know, I'm nearly 100 years old, so I lived through the 70s when inflation was high, and I was starting my career way back then. In a different industry at that time, of 41 years, almost 42 years in this business now. But it takes a while for inflation to leave because there are several processes in this that we've noted, is that usually when inflation first hits, the producers who get hit with that input cost increase first pause. They don't pass it on to their customers right away until it's generally accepted there is inflation. Then they all raise. The consumer keeps buying. But the process of reversing that requires competition to come back. And it's still, competition is slow to come back in many industries. But we think it's around the corner.
You know, a few things happening in the market right now. You actually have an IPO today. You have EToro that not only priced higher than expected, the IPO is indicated to open at $59.50. The IPO is at $52. The wild thing about that is that even in a kind of flattish market, you're seeing excitement for a new stock.
Yeah.
And for so long, we lived in a market where people bought the index and they sat back for a while. Is this going to be a buyer's market once again? Are people getting more surgical, and will they remain so for as long as we can
We think very much it's not a market that favors not listening to what the opportunity is in terms of individual securities. So it's alpha, but with some beta remaining, because you have to consider, people always ask us, what are you telling clients? As long ago as in February, where the market really started to come down, and we said, look for the babies that get thrown out with the bathwater. Don't blindly buy the dips. But look for the quality stocks that get sold off in a downdraft. And our favorites continue to be cyclicals over defensives. We like tech, communication services, consumer discretionary, financials, and industrials, which we think are just getting recognized. In fact, if you look at industrials and consider where it is right now, on one measure, it's the best performing sector. If you go back to the peak and see where we've come, it's actually slightly up versus the others still.
What are the kind of, when you say tech and communication services, I know what you're talking about. When you say consumer discretionary and even industrials, what are the kinds of companies that you're talking about, you're thinking about?
Particularly within consumer discretionary, just consider that people are still shopping. So the U.S., I always say with the U.S. consumer, when times are good, spends like a sailor who's been on a long tour of duty who suddenly has shore leave. But when times are tough, people keep shopping in this country. They shop at discount, they shop private label, they buy used cars, they buy used clothes, vintage clothes, what have you. But they keep shopping.
Used wide-body jets?
Well, you know, that may show at a very high level it's taking advantage of a gift horse, you know, without looking in the mouth, so to speak, you know, of the horse. And
yes.
so the consideration here really is that we think communication services, of course, because it's the search engines, it's the social media, and it's the streamers. But when it comes to industrials, my gosh, that's everything that to build these factories and technology and in healthcare and build them faster, you're going to need robotics, you're going to need power generation, both of alternative energy as well as traditional energy. There's real excitement here that the industrial sector has yet to be rewarded the way we believe it should, because it's a combination of technology that is infused. If you can just consider agricultural equipment, get into a tractor, it's like a computer room today when you're in the cab of a tractor.
John, it has been so nice to talk to you. Come back to us, especially if you raise that S&P 500 target. And, you know, he's been right. You do see industrials really leading the S&P 500 on the year. Companies like Boeing up more than 17%, GE up more than 33%. That was John Stoltzfus of Oppenheimer.
I'm looking for a jump in this market because I see a couple of big headlines crossing the terminal that should be favorable to stocks. China has suspended its export controls over 28 U.S. entities, and China has scrapped its unreliable list policies on some U.S. companies. So it looks like China is, you know, extending that olive branch even further, and that should be good for stocks.
But it shows you that the market is no longer reacting to the marginal headline. They only want the big ones. Now, up next, we're going to look at that IPO revival. We were talking about it. We just saw eToro indicated to open at an IPO pop. It's due to start trading today. We're going to talk more about that next in the Wall Street Beat. This is Bloomberg Open Interest. It's time now for the Wall Street Beat. There's an IPO revival, sort of, underway. Just to go to the news, that online broker eToro shares are indicated to open at $59.50 from its IPO price of $52. Also, remember, Ryan Reynolds' Mountain is considering launching an IPO as soon as this week, while Cattle, a Chinese maker of EV batteries, is poised to raise at least $4 billion in Hong Kong. So it's a global revival. Let's discuss this with Bloomberg Stocks reporter Matthew Griffin. eToro, it's interesting. What a good time to IPO, because you look at a rival like Robinhood, it's up 68% on the year. But eToro is much smaller.
Yeah, I think it's one of the things that investors have on offer here is that eToro is a Robinhood rival. It's a new way to get exposure to the same kind of retail trading, crypto trading, real surge that we've seen. At the same time, they are smaller. They offer a pretty considerable discount to Robinhood. You look at what Bloomberg Intelligence has said. They trade at, or they're valued at about 5 times their sales. That's a significant discount to Robinhood, which is about well over 10 times on a forward basis.
It's a value stock in that way.
I get that. So is this a bet on the growth in kind of new finance? Crypto is a specialty of eToro, and kind of the changing of the guard here. Yesterday we saw Coinbase replacing Discover Financial in the S&P 500.
Yes, absolutely. I think it is, and eToro has gone public at what I would call just the perfect time. You know, right as they were on the road and preparing to go public, you had a surge in general equity markets, yes, but also a real rally in Bitcoin, in other cryptocurrencies, and in the stocks of Coinbase, Robinhood, companies that have exposure. You have that S&P addition. So I think eToro is set to ride that wave if it continues.
We have like a minute left here, Matt, but you look at CoreWeave, for an example. I want to pull it up year to date because you've been pointing out it's been doing so well. It reports earnings after market today. Private equity-backed company doing this well. Does it bode well for a broader IPO revival, given that it's those private equity companies that are stuck in the pipeline?
I think it does. I mean, it's hard to know where we go from here. I think the interesting thing is you've had companies go public CoreWeave, since the big tariff swings, you've had eToro, you've had some insurers. These are, with eToro, with the insurers, these are companies whose revenue does not depend on selling physical goods, so not tariff dependent. But that could really help open up the market here. And with tariffs being cut now with the US and China, I think we're potentially in a good place for a broadening of this revival.
All right, we just saw the trade since it went public, 60%. The gain on Core. I've been trying to pin that down all day. Matt, great to have you on the program. Thanks so much for joining us. Matt Griffin there covering these IPOs for us in our Wall Street beat. Let's get a check on the markets as we head to 10:30. Right now, the S&P 500 hovering in the positive, really unchanged at 5890. Coming up, more than 1 million people a year are skipping connections. We'll talk about Skiplagged. Airlines are facing a lot of headwinds these days, from falling consumer confidence and higher costs to air traffic control issues that we're all too familiar with here in New York. Now the industry has another problem on the horizon, the upstart website Skiplagged. It's a controversial site that uncovers airfare hacks like skipping the last leg of a flight in order to get a cheaper price. It's counterintuitive, but it often works. Joining us now is Aktarer Zaman, Skiplagged CEO. Aktarer, great to have you in the studio on the program. So talk to us first about this idea that I could fly, say, to Atlanta through Detroit and pay more than I would for just a flight to Atlanta. Why is that?
It has to do with how airlines price tickets. Yeah. You would think it's by distance, like the further you travel, the more fuel you're using. But no, it's based on market. Airlines price by the market, so like depending on which market you buy, it could actually be a different price. They often charge more for direct flights compared to longer flights. So you have this opportunity called hidden city.
Travelers have been feeling crunch. They've been feeling crunch for years, but obviously everyone wanted to go back and fly. But right now, obviously that extra mile is painful when it comes to the pocketbook. How much are you seeing adoption on the site right now?
Quite a bit. Usually when there's tough economic times, we see more usage. And that makes sense because we help consumers save a lot of money, on average 50% on their ticket, which is about $180.
So why do airlines care so much? Like if I book a Detroit-Atlanta flight and just stay in Detroit and skip the second leg of the tour, why do they care? Why bother?
They care because here is a very clear case of consumers winning. Skiplagged is very pro-consumer, and that makes consumers love us, but it's the same reason why airlines hate us. It's just people are saving money.
We are very in tune to the infrastructure issues when it comes to airports outside of New York City, what's happening with Newark.
Sonali's from New Jersey.
Oh my God. I mean, just flying back Monday, right? Whether it is staffing or whether it is weather, it is a nightmare to fly, let's be honest. And so if you're dealing with all these changes among airports when it comes to staffing levels, it actually kind of difficult for Skiplagged a little bit in some ways because flights have been changing so drastically within the matter of an hour, frankly.
Well, you would think so, but we've been in the business for over a decade. The success rate of Skiplagging, which is just like missing flights to save money, is over 99.7%. So it's a very valuable thing for consumers even these days.
What are the best deals that you can get? If I want to get to San Francisco, should I book a flight to Tokyo? If I want to get to London, should I book a flight to Berlin? What are the best deals that you see?
So whatever is the best changes every few minutes. And your way of figuring out what's best is to just go on our site and search like you would anywhere else.
But what are the biggest wins that you've found recently? Or do you have someone coming up to you saying, man, I just booked a flight to Miami and I really only wanted to get to Savannah and I saved, $300?
Yeah, we have seen crazy savings, thousands of dollars. with families booking for like 5+ people. It really like it shines for last-minute tickets because that's where airlines are trying to charge consumers the most.
Okay, so we're in the middle of May. People are probably looking to June, July, maybe August. What is your advice to people who are looking into the summer travel season?
To shop around, like know your options. It's such a fragmented industry that like no one platform will get you the best price. But I of course recommend checking out our website because we are trying to be as transparent as possible and giving you the options. Like we want you to get from A to B as much as you do.
All right, skiplagged.com is the website. Aktarer Zaman is the CEO and founder. Thanks so much for joining us, Aktarer. Let's get a quick check of what's going on in the markets right now. We've seen very little change on the S&P today, but it's been hovering above the 0 level. So right now, 58.89, and we bounced up over 5,900 for a moment. The U.S. 10-year yield coming up almost 3 basis points now, just to the brink of the danger zone, right? 449.46.
4.5% is the new kind of status, and obviously the tax talks are going on. We'll talk more about that. Before that, we're going to get a look at stocks moving under the hood this hour. We're going to bring in Bloomberg equities reporter Alex Semenova. What you taking a look at?
Hey guys, a lot going on today. I'm taking a look at American Eagle. That company is taking a spill today after withdrawing its guidance like a lot of companies have this earnings season. They cited a challenging quarter that was marred by discounting and a write-down of inventory. They said that comparable sales are expected to be down about 3% and revenue is expected to be about $1.1 billion. That is down 5% from a year earlier. And the company not really casting any blame here, not citing tariffs, just citing macroeconomic uncertainty after a challenging first quarter for the company. Their CEO said that they're clearly disappointed in their execution. They said that their merchandising strategies did not drive the results that they anticipated.
KKR, you're going to tell us about KKR, but it's funny because I have the person who knows the most about KKR and the whole building.
Yeah, we
to
should
my
just
left.
There's an upgrade, right?
Yeah, they got an upgrade from Morgan Stanley today to overweight from equal weight. They said that they recommended it as a way to play the capital markets recovery that many people anticipate. They also said that it represents an attractive entry point right now because it's actually been underperforming a lot of other alternative sector companies. They raised their price target to $150 from $120. It closed at about $127 yesterday.
It's about 129 right now, looking at a nearly 13% drop on the year. All these firms have been down, but it's interesting. Great story on the Bloomberg terminal today that shows you that now people are all excited about private credit again because things are kind of tough out there and private credit would then step in. It was tough for a while for Boeing. They have been an absolute darling this year. They are an absolute darling today.
Yeah, they're up 17% this year.
Really experiencing a nice comeback. And of course, they just won an order from Qatar Airways amid a flurry of deals coming between the Gulf nations and the U.S. during the president's visit. The agreement is for the 160 aircraft. According to the White House, they said that this is the largest order in the company's history. And the commitment is obviously a big win right now, which is coming at a time when there are a lot of delays by Boeing for the Air Force One presidential jets.
By the way, you ever skip the last leg of a trip, Alex, to get a cheaper ticket?
I don't, but I might have to consider it.
I actually forgot to ask Aktarer. Apparently, sometimes the airlines will ban you as a traveler if you pull that on them.
Really?
I got to find out if that's legal because they're worried, right? They want to be able to keep track of you wherever you are. So.
Fascinating.
I'll try it and see if I get banned.
Right, you go first, right? We'll follow you into that.
Alex Semenova, thanks very much for running through the stocks on the move with us this morning. Coming up, Morgan Stanley portfolio manager Katerina Simonetti joins us, and she'll tell us why she's remaining cautious even amidst this rally. Not today, obviously, but what we've seen since the bottom. This is Bloomberg Open Interest.
Now, two of Wall Street's major trading desks are making the same bold call as U.S. stocks see trade tensions easing and finally get some buyers. They are piling into the biggest losers, though, for quick short-term profits. This is at least according to Citigroup and JPMorgan, who are bullish over the next few weeks on small caps, technology, hardware, and home builders, all of which have lagged the broader index and are yet to see a more significant rebound. Joining us now, Katerina Simonetti, Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager. What do you make of this call? Do you start to buy the laggards?
Well, we absolutely should take advantage of the market opportunities, especially since we saw such an incredible move in the market over the month of April. I mean, this is when you think about the experience that investors have been having over the last couple of years, where S&P returned over 25%, both in 23 and 24. Investors got numbed to some extent to the risks of the market and are expecting this higher than average level of returns. So when we see the decline, like we saw in the month of April, we have to make two conclusions. We have to do two things. One is consider whether we are investing appropriately, both from the perspective of income and asset allocation. And on the other side of it, we of course have to be opportunistic and see these incredible buying opportunities, both in defensive areas and also in growth areas that this market presents.
Do you think there are incredible buying opportunities right now, Katerina? I mean, back up at 5,900, back up at valuations that are, at least in large cap stocks, higher than the historical average?
Well, Matt, there are always sectors, first of all, that are just generally tends to be a little bit less sensitive to the possibility of economic recession. And while we certainly are more bullish and the chances of the recession declined significantly over the last couple of weeks, we're still not out of the woods. So areas like energy, utilities, absolutely present buying opportunities no matter what happens in the market, because they seem to be profit-driven, they pay good dividends and resilient to economic environment. But we also cannot discount the tech, because the changes that we are seeing with AI, with the potential for profitability across the sectors, the changes that AI is going to bring to healthcare, to fintech, to industrials are just absolutely incredible. And that's why when we look at technology, again, like when we look at the volatility in the month of April, number of the tech companies held up pretty well. So when we look at the earnings revisions, at the forward-looking positioning of the company in terms of profitability, absolutely, we think there are companies that present buying opportunities. This is a stock picker's market, and this is a chance for us to pick these stocks up at the prices that are just relatively low in comparison to where they could be.
Katerina, what is the hedge? I guess I've been whining for the last couple of days about. I'm sorry about the scratch.
That's right. You want to take a sip of your?
I'll take a sip of my water, but.
Yeah. What's
the hedge? That's my question.
Yes. What is the hedge, and how expensive is the hedge right now, Katerina?
So if nothing, this breather in the market, the month of April, has been a bit of a wake-up call for a lot of long-term investors, especially investors that are near retirement. So there are two things that we can do. One is, of course, increase the positioning in fixed income, because we still have the benefits of high rates. And again, when we look back historically, we have not seen rates at these levels for over 20 years. So going into high quality fixed income is an absolute hedge. On the other side of it, we see a lot of concentration as a result of this Max 7 phenomenon. Their portfolios, many of them are lump-sided with higher than normal holdings, both in individual equities and individual sectors. And this is a perfect opportunity to rebalance, go into quality, also gradual buying into this market amidst the volatility. That's a perfect hedge to this. They take advantage of the volatility, but also de-risk the portfolios, which we absolutely must do in order to get, through these times and then of uncertainty.
By the way, Katerina, you talk about investors being numb to the volatility. I'm wondering, are you talking about all investors? Are you focused on retail investors or institutional as well? And B, do we all expect some kind of put, if not a Fed put, then a Trump put?
Well, with the investors certainly have different outlook versus traders. So when we look at the longer term horizon, individual investors, they are numb to the volatility because they're thinking, well, market is going to come back probably, and seeing the recovery from the month of April kind of just justifies this. But it's not a good reason to stay not invested properly. We should almost mentally go back to the April and say, this decline, was I okay with it? Should I make some changes now? Versus trader mentality, which is very strategic, opportunistic. What can I pick up right now? Valuations, looking at the earnings revisions, looking at this idiosyncrasies in the market and buying opportunities that this market presents amidst both the tariff policy, tax policy, and absolutely Fed right now, after this pause in the tariff policy, is going to be more inclined to cut rates and stimulate the economy further.
Katerina, I guess I'm pretty stunned, actually, that you're not seeing actually a bigger bid in some of those big tech names in the Magnificent Seven. NVIDIA is still negative on the year, and the Trump administration couldn't be clearer that they would run around the entire world to strike deals to protect this industry. Do you not feel this way about it, Matt?
Yes.
I actually do. Yeah. I think that we have to go into trades like this with eyes wide open. We have to extend our time horizon, because absolutely the role in the profitability of stocks like that play a big role in the AI sector can absolutely not be discounted. And again, it's going to morph into other industries. And as we expand into our international trade, there is absolutely profitability opportunities, buying opportunities. And with the tailwinds from the government, this is going to go even farther. So we see buying opportunities. We just tell investors to proceed cautiously.
All right, Katerina, thanks very much for joining us. Katerina Simonetti there of Morgan Stanley, talking about the risks inherent really in investing, not just in these markets, but at all. Coming up, Speaker Mike Johnson is expecting a deal on the SALT deduction cap today, or at least before July 4th. We'll have the latest from Washington, D.C. This is Open Interest.
There is some wiggle room. How much wiggle room, that's what we need to determine. But at the end of the day, I think both sides will come together to get this done for the American people. Because what we'll see if we don't get this tax bill done will be gravely worse than what we're experiencing now with the SALT cap for all Americans.
That was Representative Lisa McClain, chair of the House GOP conference on ballots of power yesterday, addressing the ongoing negotiations over the state and local tax deductions that were a cornerstone of our tax code for over 100 years. Speaker of the House Mike Johnson says that a deal on SALT, the cap that Trump put in 2017, likely will come today. But he said that yesterday, and maybe today he feels differently. Let's bring in Kailey Leinz, anchor of Balance of Power, to figure that out. Kailey, House Majority Leader Steve Scalise says at least it'll be done before July 4th. What do you think?
Well, certainly the House Republican leadership is still trying to sound optimistic on the timelines here, Matt. They want the bill on President Trump's desk by July 4th, to be clear. They're hoping it will pass out of the House and head to the Senate by Memorial Day. But the SALT cap remains one of these outstanding issues that is a barrier to getting that done. The House Ways and Means Committee, after a marathon overnight markup that lasted more than 16 hours, did pass on party lines this tax package out of committee, but did so without having figured out what the SALT cap could be raised to that will pacify those SALT caucus of Republicans from states like New York who do not think the current $30,000 level in this bill is high enough. And that is what the Speaker is now directly negotiating with these members over. Keeping in mind, of course, that they do have a great deal of leverage because only 3 votes can afford to be lost in the House of Representatives with this very narrow Republican majority. And they also argue that accepting any cap is actually them making a concession, because if these tax cuts from the 2017 Act were not to be extended, there would be no cap on the state and local tax deduction. The other thing we have to consider here, though, is whatever number they ultimately come to in the House, whenever that happens, if it can get through on the House floor, it then goes to the Senate. And there are no Republican senators from blue states. The House is unique in that sense. So there may be Republican senators who are looking to take down not only a lifted SALT cap, but other elements of the Republicans in the House measures as well, including the rollback of clean energy credits, for example, from the Inflation Reduction Act, potentially looking at narrowing the scope of cuts to Medicaid. And all of that could complicate the efforts to getting this whole thing done and through both chambers of Congress by the 4th of July.
Kailey, why do we hear from, just now we heard from McLean and we hear from Rick on your show all the time that if the TCJA isn't extended, it's going to be horrendous for all Americans. But that's just not true at all. If the TCJA isn't extended, we get no cap on state and local deduction. We get a jump in the amount of mortgage interest you can write off. We get personal deductions for, dependents for every member of your family. I mean, for thousands, if not millions of American working class American families, it would be much better without the TCJA.
Well, likely what all of those individuals and President Trump, mind you, who argues if this doesn't pass, it will be the largest tax hike in American history, would say you have to look at the other parts of the country as well that don't necessarily have the concentrations of wealth that the coast do in states like California and New York, looking at potentially an income bracket, say, at the highest level, moving at a tax rate higher than 37%, which happened in 2017. That's the level where it was set. And this bill, of course, does not do what President Trump had floated, raising that threshold to 39.6%. So obviously, depending on your location, what constituency you are representing, you may feel differently about this. But the wide messaging you are getting across the Republican Party from the halls of Congress all the way to 1600 Pennsylvania Avenue, and the messaging you're getting at the White House is that there would be greater economic consequence if the tax cuts were not extended than those who might benefit from the SALT cap going away in states like New York. All of that said, of course, this is why it fits into the president's economic messaging as well, as he tries to explain that tax cuts are part of this policy, not just the inaction around tariffs, which potentially, of course, have detrimental economic effect with inflation and growth. He says this is key to kind of balancing the scales.
I do want to have you comment for a moment here on what's happening with the universities in this tax bill as well, because you have the Trump administration versus elite universities, Harvard and Columbia, for example, but you also have Harvard, Yale, Stanford, Princeton, MIT facing a higher levy here, but also colleges that are not as wealthy facing rises too. What kind of pressure is that going to put on endowments?
Well, it could potentially put great pressure on them, Sonali. You're right. There are institutions that are feeling direct retaliation from the Trump administration, which, in fact, yesterday froze another $450 million in grants to Harvard specifically. But the lifting of the endowment tax here is really substantial, from a rate that was quite marginal in the single digits to now as high as 21% that these universities with large endowments are going to have to pay. And that could have drastic impact on their finances, on the financing specifically of research, where a lot of things like health research emanate from these institutions. But that is one of the pay-fors Republicans are looking at here, knowing that there was only so much they could actually do in terms of adding to the deficit and trying to cut spending as well. It's all about trying to make the math work, but universities may feel the pinch as a result.
All right, Kailey, thanks very much. Kailey Leinz there, co-host of Balance of Power. You can catch her program at 1 p.m. and 5 p.m. right here on Bloomberg Television and Radio. Coming up tomorrow, Stuart Kaiser joins us from Citi, as well as Liz Ann Saunders of Charles Schwab and King Street founder Brian Higgins.